Karen, is there any questions that showed up in the chat that I can knock out real quick while we're trying to get a brave soul to step up? And while she's doing that, you can either physically wave like this, or you can go into the emojis there and you can click a little hand waving, and we'll even open up your mic, or you can open up your video if you'd like to ask a question. So Karen, we got anything to start with there?
We do. There's actually several of them in the chat.
Okay.
The first one, oops, hold on, I lost. For someone who is only 3 years out of bankruptcy, is the
Mhm.
program able to help turn credit around? I
Oh,
only
what a
have one
great
credit.
question.
Oh, wait a minute. Let me tell you the details. I
Uh-oh.
only have one credit card, a mortgage, and currently in school. Pay tuition out of pocket. My mortgage company doesn't report my payments, so I don't have any positive credit history. I
Okay.
use my credit card to pay my household bills minus mortgage and health insurance, and then I pay it off.
Okay, got it. Okay. Well, a couple things. One, the only reason this is good for all of you to know, I suppose, is an FYI, but if you had a bankruptcy in the past, that's the reason that, of course, they're no longer reporting to you. However, I will tell you that if you are back on track and you're paying your mortgage, you can communicate with them to start re-reporting. They don't automatically do it. In fact, they are disallowed from doing it during that process, but they don't know to turn that back on. So to be on the safe side, because they're not supposed to be coming after you for a debt based on the legalese of bankruptcy protection court and so forth. But in most cases, if you request for them to begin re-initiating reporting on your account, they will do that. But more importantly, paying down your other debts faster and therefore reducing those utilization ratios. Sorry, I'm talking like an old mortgage nerd guy, but it's one of the biggest impacts of credit isn't just the heavy stuff like bankruptcies or foreclosures or repossessions or late payments. Those are obvious ones, but it's oftentimes too much utilization of a credit card. You have a $10,000 limit and you've got $9,900 you owe on it. That's probably one of the biggest killers outside of the obvious negatives. So you could potentially get your mortgage company to be re-reporting, provided you're paying on time, of course, because if you're not, then that would re-report or continue to report negative information. But if you're back on track there and it was something in your past, that might be something that would help you there to reinstate that part of a fixed loan, fully amortized, secured mortgage or debt. But as far as the car loan, I think you said, or certainly a credit card, getting those paid down faster is definitely going to help. The other great thing about our program is your credit from that standpoint is not an eligibility issue for us, right? Because we don't have your social security number. We don't ask for it. We don't ask for account numbers. It's simply evaluating the basic profile of your financial situation to help you be able to manage that money more efficiently, pay less interest, pay down the debt more quickly, help you become a better budgeter and better financial steward of your finances and so forth. So credit is an issue with us, but yes, most certainly one time is going to be on your side and continue to improve your credit by default, provided you continue to pay accurately and in a timely manner about your other debts, but getting those debts paid down. Now, of course, getting the car loan paid off faster will free up more cash flow dollars, but that's probably one of the things that's helping your credit the most because it's still an installment loan. Revolving accounts are the biggest danger. And of course, high utilizations are going to hurt you. So, in all respects, not only is there nothing that utilizing the system could do to hurt you, obviously, but it's only going to benefit you, not just in terms of lowering those balances, improving your scores because the ratios are better, but also helping you get out of debt quicker, save more interest, and obviously plan for the future because you're probably going to need another car in the future. You might move at some point in the future. All these things become relevant. The system just becomes your absolute best friend and your virtual financial coach to help you navigate through all of these things. And then you also have a better forecasting tool. You might say, you know what, we're going to buy a new house in 3 years or 5 years or get a new car in 2 years. Or like me, my daughter's going to go to college in, oh, God forbid, 3.5 years, or whatever the case may be. You're automatically going to have the ability to now start providing some guidance and some financial forecasting to help you sort of navigate the terrain of the various financial challenges that come around in your life.
Thank you so much. Someone else asked just generically, does this affect credit score?
Okay, well, again, because we're not pulling your credit, credit is not a factor for us. Again, if you have a line of credit, as an example, in the velocity banking strategy, maybe it's a personal line of credit, business line of credit, home equity line of credit. That's great. Our system works perfectly in tandem with that. That's why we call it accelerated velocity banking. but it's not required. So for those of you that maybe were trying to get a line of credit, which is always a useful tool to have at your disposal, but it's not required. If we can set up a high yield savings account and checking account, you could utilize our system very successfully just with those basic components. So if you have the availability to secure a line of credit, great. If not, that's also okay. But as I was just stating in the previous question, without question, and I'm again being an old mortgage snob, okay, but without question, continue to pay your debts on time is going to improve your scores. That's pretty much an obvious one. But the faster we can pay down these debts and therefore lower the balances and lower the ratios and utilizations, the more that is going to positively impact your score. So it's another ancillary benefit of using a system. Yes, saving money on interest. It's better to save it for you in your pocket than giving it to the bank. Paying down debts, the same kind of thing. But then last but not least, of course, being able to be debt free faster and improve your scores all at the same time. There's not many things in our industry that can help you accomplish all of those things without the limitation of having to qualify in that traditional manner. So I hope that helps.
Another person asks, I want to make sure I'm understanding this. Does the MMA do the work for my bills? I have tried to do velocity banking with a line of credit and I stopped. I still don't quite understand. I've spent hundreds trying to do this.
Okay, great question. So let's go back to the example of GPS, right? We talked about that a little bit, but it's probably worth repeating to some degree. Here's the cool things about GPS. Here's the limitations, but here's also what it does and does not do. First of all, GPS does not arbitrarily decide your destination, right? You're in control. You decide where you want to go. Its goal is how does it navigate you from point A to point B as quickly as possible. Number two, and this is one we don't really think a lot about because it's defaulted into the system, but we can customize it. Just sometimes we forget that. You can customize your route that it's choosing based on a preference you have, right? Shortest route, fastest route, avoid toll roads, avoid highways, etc., right? And it'll calibrate based on that preference. So GPS does not pick the location, you do. And it doesn't care who's driving, whether it's you or your child or your dad or your mom or your brother or sister or your spouse or whatever. You choose who drives, and it doesn't care about the vehicle. You could be walking, you could be on a bicycle, a bus, a car, or a pickup. It has one goal. It's navigational guidance and assistance. It's helping you to not only navigate the quickest route, but to recalculate based on changes. How does that analogous to our program? Well, our program, you're the one that is in control. We don't have your social security number. We don't have your account numbers. We never touch your money, nor would you want us to. That's why there's not privacy concerns like you get with companies constantly having their data taken. There's no data for them to take for us. They're just numbers, basically. And it has nothing to do with your account numbers or anything like that. So it helps us to ensure that kind of privacy and protection. But the other thing is the system isn't telepathic, right? So you have to obviously provide it the information that you need. But now it's going to mathematically crunch and calculate which debt to pay, how much and when. But let's go back to GPS again. GPS says based on where you want to go, based on the preference that you've provided, regardless of who's driving, regardless of what vehicle you're in, it's still going to say turn right in 200 feet. Now, it doesn't grab the steering wheel and turn it for you. You still have to turn it yourself. But now you know exactly where to turn. And what happens if you don't turn? It recalculates, and now it says, by the way, this just happened to me today because I missed a turn. I wasn't paying attention. It's going to say now go 3.1 miles and turn right. But now you added 3.6 miles and you added 5.2 minutes to your destination. And now here's a really cool thing. If you're ever going to an appointment and you're supposed to be there at, I don't know, 11 o'clock in the morning, and your GPS says you're not going to be there till 11:06, what do? Well, you put your foot on the gas and you drive a little bit faster. You're more likely to maybe not come to a complete stop when you're going to turn. You might kind of go through that orange light, right? Well, this provides that same sort of opportunity financially. So we don't touch your money, but it's telling you exactly what to do. You'd bank exactly like you're doing now, but now you're not guessing. Now, based on every changing factor, your income, whether it goes up or down, the frequency of how you get paid, whether your balance went up or down on a given card, interest rate balances everything. So it's exactly like GPS, but for money. It's financial GPS. So again, GPS doesn't turn your steering wheel. You're in control, but it does the calculations for you to keep you on track and to make sure that you're able to get back to your destination. So we're never touching your money, nor would you want us to, right? Because it only knows what you tell it. That's also important because let's say you're going to go on a family vacation, I don't know, 6 months from now, but you didn't tell the system. Well, there's no way that it could know that, right? So it's only going to know what you tell it. But there are ways in which you can tie this into some of your banking accounts to provide that information, et cetera. It's another conversation. But the end result is it tells you exactly what to do, how much, to which debt, when, but you're the one that still executes it. Because there might be something changing that you haven't told it, or you might know that there's something coming up in a couple of weeks, or whatever the case may be, and you just not provide that information to the system. So it's still going to require your basic data input, the same things you do to manage your money now, but it does the calculations for you. And to Amanda's point, it now lets you know the impact. Her husband, I believe, does landscaping and so forth. So obviously, if he's up north in Ohio, I believe, or Indiana, guess what? They're not going to be doing as much lawn care in the winter. So his income is going to go down. But now it tells him exactly the impact of that reduced income. Or if he made more money, it would tell them what the impact was in a positive way. So that's kind of the answer to the question. You don't want us touching your money. We never do. You're always in control. We don't have your private information, account numbers, et cetera. Just like GPS doesn't ask you to give your birth date or your social security number to be able to tell you to turn right in 200 feet. It doesn't even ask you what you're driving. It doesn't say, is it a Ford pickup truck or a, Mazda Miata convertible? It doesn't care. One goal, how to navigate there as quickly as possible. So hope that helps.
Here's another. Is there an average percentage of extra money needed monthly to pay mortgages down more quickly? And then she also asked, do you need a business for lines of credit?
Wow, what a two great questions. Okay. So first, no, there isn't. There's no magic formula, no magic dollar amount. Obviously, the more you have available, that's always going to be positive. The system has more access to be able to leverage that money. But literally, we can help anybody with debt, but not everybody with debt. You have to be gainfully employed because you have to have an income, right? Like we said, it's math. It's not magic, right? But you literally can have as little as $1 discretionary income. Now there are some scenarios where you could be a little bit over budget, right? Or a little bit of negative cash flow, but it would have to be very short term. Like it was something because you had some unusual expense or had some sort of shortfall, but it's got to be a short term thing. Otherwise, the system, is obviously going to negative out if we said neg out. So you could have as little as $1 discretionary income. Now, is $100 better? Sure. Is $500 better? Obviously. $1,000, of course. So the results are all going to be impacted by debts, income, expenses, and what that looks like and what that leads to in terms of net positive cash flow or discretionary income. The second part of that question was something related to a business line or something along those lines.
Do I need a business for lines of credit?
No, absolutely not. Again, if you have a business and you're trying to take out a business line of credit, great. If you want to take out a personal line of credit, great. If you have access to a home equity line of credit, great. But guess what? None of those things are needed. They can work in tandem with our program. And in some cases, they might help you to slightly accelerate your result, but they're not needed. Now, years ago, when lines of credit might have been 4% and savings accounts were a tenth of a point, it's probably a more advantageous strategy. But now a lot of lines of credit are 8, 10%, and a lot of savings accounts are 3, 4, 5%. You'd be surprised that earning positive interest can achieve the same or even a better result than having to have interest that you're paying on finance charges with a line of credit. So the answer is it can work perfectly with lines of credit, but in no way is it required or necessary to be able to utilize the system.
Does the MoneyMax team have relationships with financial institutions to help acquiring lines of credit?
Wow, very interesting. Well, we don't provide that kind of guidance because, again, we really want that to ultimately be your choice. If something was to go wrong in that scenario, we wouldn't want to be responsible. But sometimes we have companies we're familiar with that we could say, hey, we've had good experiences with these ones or that ones. But generally, we try to stay in our lane. We try not to cross over that line too much and to provide advice on because remember, everybody's in a different state too. We're in all 50 states. So different states have different regulations and different requirements with different banks and so forth. So that would be a pretty broad question. It would be pretty specific to your municipality, if you will, the area of the country that you live in and things of that nature. So we don't generally get into providing that kind of advice unless, for some reason we just happen to know of somebody that could be helpful. But generally we try our best to stay in our lane.